Hello, I'm Danny Hewson, Head of Financial Analysis at AJ Bell, and I'm joined by James Flintoft, Head of Investment Solutions at AJ Bell. We're going to be discussing the performance of AJ Bell Funds and the Managed Portfolio Service in the second quarter of 2025, which has been eventful so far. We'll also assess what things might look like over the second half of the year. James, thanks so much for joining me.
Hi, Danny.
Now, let's start with the main talking points for this quarter, and I think this answer may go on for a while.
Yeah, let's, I suppose, keep it short and to the point, and it is all about the US, isn't it? And that uncertainty, that word again, around tariffs and the trade war situation. And thankfully, we have stepped back from the brink that was there in April, but there's definitely been some sort of impact on growth. Potentially later down the line, inflation, and that's really what the market's been trying to assess is what's going on there. And it is very difficult at the minute because there's lots of noise in the data. It's difficult to determine what sort of impact there has been. And of course, there's been other things going on as well, particularly in the Middle East, between Iran and Israel, the conflict there. Kind of a surprise that it hadn't had a bigger impact on markets through the quarter, but it has calmed down at least by the end of the quarter.
Let's zero in on equities then. How have they performed?
Yeah, it was a big sell-off at the start of the quarter around that trade war. And then there was a big recovery. And the upshot from that really has been that the dollar has been weaker. That investors have started to lose a bit of confidence in the US around the unpredictability and uncertainty and started to allocate a little bit elsewhere. So that weaker dollar has had an impact on returns for sterling-based investors in the US market. So it's not recovered as strongly as it has done for US investors. And other markets have come to the fore again, particularly in emerging markets. Korea's done well, Taiwan's done well. Europe continues to do well. UK's had a good quarter. On the flip side, China has been a bit weak after that bumper Q1. A lot of the trade war sentiment really weighing on the market there.
Let's focus then on bond markets because once again they have been interesting.
Yeah, yet again a bit volatile. Thankfully, at the start of the quarter, gilts in particular provided protection for portfolios, which was useful as equity markets took a drawdown. But they have been volatile because inflation, particularly in the UK, is running ahead of target. We're now at 3.4%. In terms of headline CPI inflation. It's expected that inflation will run at above 3% for the rest of the year. And that's posing a challenge for the Bank of England in terms of how they are able to cut interest rates. And that's proven a challenge for the bond market to deal with. In terms of corporate bonds, it was a better quarter. Their credit spreads were tighter. So people were demanding less of a premium to lend to corporates. And then that weaker dollar had an impact on any dollar-based bonds, so particularly in emerging markets. Those bonds issued in the US were weak in terms of how they're positioned in our portfolios.
So what about AJ Bell Funds and the Managed Portfolio Service? How have they responded?
Yeah, well, returns over the 3 months have been good, despite all that's been going on in markets. And particularly for the higher risk portfolios, performance has been strong. Diversification in those portfolios has really come to the fore this year. And our relative performance there has been good. If we think within the range, the active portfolios have been doing well across the spectrum, really. So we've had some outperformance amongst some of the active equity managers, but particularly amongst the fixed income managers as well. They've done well. If you zoom out a little bit on a longer term basis, 3 and 5 year numbers, the passive range is still outperforming the rest of the range there.
And we mentioned last time that you made some changes to the portfolio in January. You're obviously keeping track of how they performed.
Yeah, the big one's been Europe. That's continued to do well on the back of that narrative around changing fiscal policy in Germany. Some of the other changes in emerging market bonds, we added to those. They've been a bit negative, particularly for those low risk portfolios. But generally speaking, that diversification, as I said, in the portfolios has really come to the fore this year and has been positive for us.
James, thank you so much. We look forward to catching up with you and the rest of the team over the course of 2025.
Thanks, Di.